1 of them lost, 3 of them won, which means we've got a 75% win rate. So very, very quickly, you take those exact same supply and demand zones that would have lost you money, and you trade them off the back of the sweep or manipulation of the high or the low, and then every single one of these. Supply and demand trading does not work, and I'm going to talk you through exactly why it does not work today. We've done a few videos on this, but you guys are still not getting it. And the top search on YouTube right now in my research part of my YouTube analytics is the best supply and demand trading strategy. I need you to all understand something. It is an inherently flawed trading strategy, and the sooner you learn that, the better for your results. So this is going to be a nice quick one today. We're going to keep it less than 10 minutes. Let's get into it. Let's talk through why supply and demand trading does not work, and the way that you can, if you still want to look at supply and demand zones, make it work for you. And as always, please do me a massive favor, hit that subscribe button. Let's draw out some supply and demand zones, and let's talk about, the reasons why you might be struggling with it. So I'm just going to go back and just pick a random section of price. Okay, we'll go into the charts like this and we'll have a look, because you can find this, and this happens pretty much anywhere you look. So let's just zoom out. Let's talk through and draw on our supply and demand zones. Let's talk through our theory first. So we are saying that the supply zone is a move up before a big move down that leaves an imbalance. That, I think, is pretty much everyone's understanding of a supply or demand zone. So let's just draw out a few of these supply zones and demand zones, and let's see the sort of results that we're getting. I'm going to draw them all on so it's a really authentic and accurate way of looking at it. Technically, these are all supply zones in here. I am just going to be looking at the ones kind of at the top and the bottom of runs with imbalances left behind, but this will go a long way to kind of show you the reasons why you're probably struggling with them. So there is an underlying current of liquidity in the marketplace that basically says, unless you are on the right side of liquidity manipulations, you are going to struggle, you are probably going to fail. And what I need you to understand is that while supply and demand has its place in the marketplace, it is not traded in the way that you are taught. Okay, so I've just drawn a few on. I think that hopefully you can see that, I've not been overly selective there. I've drawn on every single one that I could find. And that should give us a really clear idea of what we should be looking at. Let's draw that one on as well. Now, I only really want to look at the ones that kind of break structure and things like that. So, that one there, this one here, that one there, this one here. These little ones in there, they are technically supply and demand zones, but I'm not majorly fussed by them, because ultimately the ones that aren't at the bottom or the low of a swing are probably less favorable for traders anyway. But I think, as you can see, the majority of these that we've drawn out have all failed. Okay, so let's leave them red if they failed, and let's just use this section of price. Price doesn't come back to that one, so I'm going to get rid of that one because it hasn't been retested. Okay, let's leave them red if they failed and put them green if they passed or held. Okay, so failed, 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 held. If we're going to here, at least, let's just give it some grace there. Failed, 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 failed. Okay, so let's work out how many we've got. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we have, let's just load up a calculator. I'm not that quick at maths, unfortunately. So 100 divided by 13. Okay, so each one of them is 7%. So 11 of them failed. 84% of them failed, and 2 of them held, okay, which is the other half of the 100, which, if my maths is working, is about 15%. So in this small selection of price, we have seen that the supply and the demand zones hold 15% of the time, but fail 84% of the time. If you're enjoying this video, please make sure you pop me a like below. Unless you're taking out a really good risk to reward ratio, you are going to struggle. And if we just use 50% of the zone and we hold as high as we can, that one gives us 7%. This one, however, would have given us a maximum of 2% before we failed. Okay, so we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 losses. We've made 2. If you got the perfect exit, that is, we've made 2, and then we've made 7.9, so 10 against 11 losses. You'd be 1 R down. I think you can probably agree that for if you have a decent trading appetite like I do, I want to be trading more than a 15% win rate, and I don't want to have to try and get 8R trades every single time I take a trade. Okay, what you need to understand is that there's a reason why these fail. Okay, and part of the reason is because the algorithms that control the marketplace, and whether you believe that or not, there is an underlying movement pattern. Okay, whether you think it's random or algorithmic based, it doesn't matter. This isn't for this video. But what you need to understand is that whatever moves the marketplace, the moves are fueled. Let me just put my arrow on here. Okay, the moves are fueled by liquidity. Okay, what happens in these areas is they are ultimately swept by price first. That then adds liquidity. So what happens is when price comes back here, let's move that back. When price comes back up here, okay, and everyone's trying to sell, people place their stops. Institutions place their stops. People place buy orders as well because they're breakout traders. And so what they do is they come up, they take out the stops of the early sellers that maybe got in here, and they take in, they activate the buy trades from early buyers, breakout traders, and then they reverse the marketplace. Okay, when I talk about I'm talking about the algorithms, I'm talking about whatever makes the market move. Okay, this isn't something that is a question. Okay, this is something that absolutely fact. Okay, it's a zero sums game. So the market moves when there is fuel to the moves. So in order for the moves to happen, okay, there needs to be a clearance of orders. Sellers have to be taken out, buyers have to be activated and then taken out with the reversal. Okay, and in areas like this, what happens is that those highs are taken out. Okay, the buyers are taken into the marketplace. Then with the price reversed, the buyers then come out of the marketplace, and it clears the market for larger moves, which is why often after these sweeps you'll see these bigger moves that happen. That's a good example here. Okay, it swept out 1, 2, 3 supply zones, demand zones, apologies. It swept out 3 demand zones, and then prices pushed higher. So what you need to be understanding is that the market is going to manipulate these levels, and why it does that is kind of irrelevant. You need to go back through your charts and do exactly what I did when I was supply and demand zone trading, so that you can see that you are much more profitable if you wait for a sweep, then a rejection of some kind, and then get into the marketplace that way. You can then take up to a liquidity point, and these are the rules that I want you to follow. Okay, I want you to have the following rules in your new trading strategy. Okay, so 1, sweep of supply or D, so SOD, sweep of the SOD. Okay, then 2, I want rejection. Whatever rejection pattern you want is fine. Engulfing, cool. Pin bar, cool. Whatever you want, not fussed. We're then gonna enter, so 3, enter with stop below the sweep. Okay, 4, target first liquidity. So we're going to follow that through really quickly on a couple of these trades. So we've got our sweep, 1, done. Just make that over there. Okay, we've got our sweep, that's done. We've then got a rejection here, so we've got some wicks there. We're going to enter here with a stop above the high of the sweep. Let's get rid of that, and then we're going to come down to the first liquidity point, which would have been that little low there. So you see that there, that's our first liquidity point there. So we're coming out of the marketplace, and we've now got 2.7 at the market. So you can see we're doing well already. So 2.7 done. Okay, I'm going to move that over there so you can see it. Let's move on next. So have we got a rejection here? So we've broken that and we've closed below. So that is not a rejection. This area here is not a rejection because we've closed below. This one held, so that would have been a no trade. This one, no rejection, so that would have been a no trade. This one, however, we get the rejection, as you can see. Those pin bar candles, the engulfing candles. Let's say we got a nice entry like this. with a stop below the low. Okay, so we've had our sweep of the supply zone, sweep of the demand zone. We've then had rejection. We're going to enter with a stop below the sweep, and then our first liquidity target is there. So that gives us 3R. So we're now up here, and we've got a 3R trade. 3R trade, perfect. Move on to the next one. So this one here, stop below the low. So we have a supply zone, demand zone here. We've had a big push up, great. So we have a push down, then we have a rejection. So we enter like that with a stop below the low. I'm not going to ignore any trades that fail. Okay, I'm here to show you exactly how I would trade this. And then we go stop above that level there. So that would give us 2R, but the trade fails. Okay, so we're down now, -1R. Okay, let's move that over here. -1R. Okay, what do we have here? So 1, 2, 3 demand zones here. We've got a sweep here and then a rejection. Okay, we enter in like this. Stop below the, oh, sorry, no, tell a lie, that's not a sweep. What do we have here? 1, 2, 3 levels. So we have a push down into that demand zone, then a rejection, then a push down, sweep of that. Do we get a rejection? No, because we get a close below. We then get this big push down which sweeps all 3 of them. So I'm going to get rid of that because effectively I'm looking at this bottom demand zone now. We get a lovely rejection there and an engulfing candle. That's not my trade tool. And an engulfing candle. We're going to put that up there. First profit target, you could have taken it this for 2R if you wanted to. That's probably how I would have traded it. A lot of people might have held up for that liquidity up there. So 4R, let's say be conservative. I'm not here to make you think that this is one of those really kind of manipulated trading strategies you see on YouTube a lot of the time. So let's put that in as 2.34, so 2.3R. Okay, so what have we done then? We've got a 2.7, we've got a 3R, so that's 5.7. Then we lost one, so that's 4.7. Then we added on 2.3, so that's 6.7 plus the 0.3, that's 7R. Total in this trading strategy is 7R. Okay, and what's fantastic about that is we had 4 valid trades, 1 of them lost, 3 of them won, which means we've got a 75% win rate. So very, very quickly, you take those exact same supply and demand zones that would have lost you money and you trade them off the back of the sweep or manipulation of the high or the low. And then every single one of these, that's a win. That was a win. This was a loss. Okay, but the 4 trades that we took, we ended up getting a really nice position out of them. We ended up making some money. And there we go. And that in 12 minutes, about 12 minutes anyway, is how you successfully trade supply and demand zones. Basically, you trade them by not trading them. So that's the video. Thank you guys. Appreciate you checking that out. Nice and quick one today. As always, please pop your comments below, and I really, really appreciate it if you've got all the way to the end that you hit the subscribe button now. Cheers.